we start, let me just. All right. Hey guys, what's up? Welcome to the second ever Charts and Coffee. Well, it's a double shot, but there's coffee in it, so we're gonna count it. Um, so it is currently 10:40 Wednesday night here in Pacific Standard Time. So for a lot of you guys who live on the East Coast, it's like what, like 1 a.m. or something. So, anyways, let's jump right in. If you gain any value from this video, please give it a thumbs up, smash that like button, and if you want to see more content like this, then hit that subscribe button because I post. I'm going to be posting once or twice every week, so you'll have a lot more content coming at you. So let's jump right in. So here is the British pound and Japanese yen. So there's been some crazy Brexit news lately, right? We saw the pound completely fall off. And by the way, while I'm doing this charts and coffee, how I like to analyze uh, a lot is I get rid of all the chart work, the technicals. I mean, I'll keep my moving averages on there, but I just go through the fundamentals and price action and, then generate ideas and then look on the technical side. So we're just going to be talking about the charts here, right? Price action, fundamentals, what's been going on, currency correlation, whatever, right? So let's jump right in with the British pound, right? Obviously, the pound has been really sold off this week. And the main reason for that is Brexit stuff, right? As always, Brexit's been affecting the pound for like 4 years now. They voted to leave in 2016, and they haven't been able to leave yet. But this year it's happening. The official transition period for the whole Brexit stuff is in like a month. It's in October 15th to be exact. And because of this, they need to reach a deal with the EU, right? It's very beneficial for the United Kingdom to reach a deal with the EU, a trade deal, right? Because otherwise, it's really going to affect the UK's, companies, and it's going to hurt their economy. And so, essentially, that's why the pound sold off this week. Is it's looking increasingly likely that the UK is not going to be able to strike a deal in the next month. And because of that, right, that means UK's economy will not be doing well if there is no deal, which got priced in, right? And when I say price in, I mean the market uh, basically tries to anticipate the future, and that also means anticipating future prices. And so, if a no deal is reached, the pound should end up lower. And so the people who are owning the pound will sell it, and people are also selling for profit because they know, the pound should weaken if that outcome comes true, which it's becoming increasingly and increasingly likely, right? So when I just say price in, I mean the market is trying to move to a future likely outcome, right? And so the pound is sold off. Now looking at GU, right, we can clearly see it. They're very similar charts to GJ because the yen has been in the same situation as the US dollar, which is they've both been weak. And so because those two currencies have been weak and the pound has been strong, naturally the charts are going to look pretty similar, right? So the question is now, what's going to happen with the pound? Well, my long term, and by long term I mean, maybe 6 months to a year from now, I anticipate the pound to be quite a bit higher. I anticipate the pound to appreciate. And so what that means for GJs, I expect in the next um, 6 months to 1 year should be up, I believe, in these levels, or maybe up here, or maybe higher. I that's my long-term prediction. Now, I'm not going to trade off of that bias right now. I need to look at the current situation. So looking now at the pound, you know, it's now into these moving averages, these daily moving averages, right? The 50 and the 200 crossed over right there, which obviously has not happened since April. And the last time that it happened on the bullish side was the 5th of December, right? So, historically speaking, when the 50 crosses over the 200, the pound is naturally strong, right? But, we're not going to trade off of a moving average crossover, but it's just something to keep in mind that, um, the bullish, in a longer term chart, the bulls have the advantage, right? And so I think unless we get a break of this level, um, I could definitely see this thing heading higher. Why? Because no deal Brexit has been expected for quite some time. And if expectations about something remain the same, the markets will naturally usually move on, meaning it won't care about it, it won't react to it, etc. However, this time the stakes are a bit higher because there's 1 month left, right? Previously, when there was negative Brexit headlines, um, for the most part, it hasn't affected it. If like in the middle of summer, if there was a headline, for the most part, it would nothing would happen because there were still months and months until something had to happen, and now it's about to happen. Right, they're about to officially leave, and also reports have come out that Boris Johnson, which is the Prime Minister of the UK, is you know doesn't seem too optimistic that they're going to get a deal, and oh, sorry for the yawning. And isn't trying too hard to reach one, and so obviously that's also negative for the pound. However, in the grand scheme of things, if I could honestly, for the time being, I could see this thing stall out until I think we get closer to that October 15th deadline, and until we get further negative news. I don't see this thing selling off here until we, really start seeing it's getting really close to that deadline. Um, or even it's on October 15th and there's no deal, then I could see a stronger sell off, like really, maybe into these levels potentially, and looking at GU into these levels down here. But yeah, until then, I could see this thing chopping around or heading higher. And that brings me to my second point: is I see this thing heading higher because I believe the yen, the Japanese yen, will continue to weaken in the medium term. And the reason for that is because the Japanese yen is a safe haven. And well, let's look at AJ here. So looking at Australian dollar and Japanese yen, we can see this is the daily chart. The yen, ever since March, has weakened, right? And the reason for that is because of risk sentiment. And what risk sentiment is basically global investors, are they feeling optimistic about everything going on in the world and more specifically in the US, or are they feeling fear? And so greed or fear is really what drives the yen, and to a lesser extent the Australian dollar, because Australian dollar is a risk-on currency, meaning it appreciates when there's optimism, and the yen is a safe haven or risk-off currency, meaning it appreciates when there's fear. And so lately, you can see there's been a lot of optimism in the market, which has caused this pair to continue heading higher, with the occasional U.S. and China news, or uh, you know, usually that's what brings it down for these little dips, um, for the most part. But now the U.S. elections are coming along, and yeah, U.S. elections are coming along, which is going to create another uncertainty, which could shake things up and cause some consolidation. But for the most part, I think optimism will continue, right? Because if you think about it, in the last couple months, things have still been pretty bad, with COVID. And if a market can go up on bad news, it can definitely go up on good news, right? And so I think once this virus, starts getting developed more, or sorry, vaccine for the virus, and I think especially once we get one released and it's approved in the next 1 or 2 months, which is the likely, that's the deadline people are thinking, early November probably, or sometime in November. For the most part, is the median estimate. Some say even end of October, which seems a little optimistic, but definitely November, December. And so I think this thing can definitely continue, heading higher up till, these levels or even these levels. So with that fact, I think GJ for a swing trade makes more sense for a bullish bias long term. It's just the question of when will this Brexit mess clear up, and U.S. elections, if that's going to cause a little bit of buying for the yen. But besides those two risks, I think up is the most likely scenario. But like I said, this thing could head a little bit further down on this negative Brexit info, um, and then head higher. So, but that's my view for GJ. Let's move on a little bit, right? So the pound, again, like I said, I think, it might have another week or two, or maybe three of uncertainty. But, overall, I think, it probably won't break this low on GA, right? Like I said, this might not be the official bottom, but I think somewhere close to here will be, because, like I said, a no deal is kind of expected almost at this point. Right? So I think this area, there's also a lot of liquidity, and right, if we just drag it, we can see that. So yeah, so my view is longer term, probably more bullish or consolidation. The reason why I'm a little bit cautious about GA right now is the Australian dollar is going to gain strength. I think in the medium term, because of the same reasons for the yen. I think there's going to be optimism and greed in the market with risk sentiment, which should help the Australian dollar appreciate, right? And the pound, long term, I don't see being short, or even medium term. Um, I don't know if I necessarily see a short, and so because of that fact, um, yeah, I could see this thing heading higher or just consolidating if they're both strong, right? Because I anticipate the Australian dollar will be strong. If the pound is also, uh, you know, sort of gain some strength, this thing should just chop around. And I've talked about this before in my videos. I'm just trying to line up a strong with a weak, a probable weak, and a probable strong together to form a bias, right? To find the pair that should move the most. And so, yeah, this pair seems like it's going to do this, right? Because at this point, they were both strong. At this point, they were both pretty strong. And so look what happened, right? Not much. Right, this is what it looks like when you have two strong currencies. This is what it looks like when you have a strong with a neutral slash weak. And this is what you have when you have a strong with a weak, right? So it's all about, pairing up a strong with a weak. And so looking at this, if Brexit does continue to weigh the pound down for the next month, I could see a move lower into these levels. But like I said, I don't know if I see a break of this low. And then I could see a little bit, maybe probably some chop. So I probably won't be touching this pair too much unless it's a short on this negative Brexit sentiment for the next month. But if we do get, I just want to warn you guys, if we do get a deal with the EU, like we did last time, at the last minute, if we see that happen, then the pound, looking at it, will shoot up for sure. I don't know how high, but Let's look what happened last time. Last time, uh, we're in the same situation actually. Um, I remember it because I was trading it, and yeah, as you can see, the pound sold off. It was actually, oh my God, it was like actually like almost exactly a year ago. That is crazy. Um, so September, we saw the pound sold off, and um, a couple days before the pound or the UK was supposed to leave. Yes, I know it's been extended a year, but right before they're about to leave, they struck a deal. Well, it had to be approved, so that kind of, you know, they didn't actually finally reach a deal, but they came up with a plan of sorts, and look what happened, right? Let's see, how many pips was that? It moved in like 2 days. It moved 500 pips, and then in like a week and a half, it moved almost 800 pips. So just be on the lookout because that's easy money, free money basically if you catch it at the right time. Um, so yeah, last time I missed that move because yeah, I didn't get in early enough and I was not trying to chase it. I didn't know how far it would run, but yeah, this time definitely on the lookout. Analysts are reporting, hey, it's possible. I know both sides are playing hardball, but when it comes down to it, they might try to reach a deal. So we'll see. But let's move on to GN here. So GN, I took some nice shorts this week on this, Brexit news, and the New Zealand dollar has been gaining some strength recently due to this risk-on sentiment and just a natural correction from, the New Zealand dollar being so weak, right? If we take a look at AN here, you know, the Australian dollar has gained a lot of strength on the New Zealand dollar because of the Central Bank of New Zealand. The what's the technical name is Reserve Bank of New Zealand, RBNZ, came out and said that they're expecting to probably go into negative rates in a couple months, which is really negative for the New Zealand dollar if their interest rates are negative, because that shows how, obviously how bad the situation is for their economy. And we saw the New Zealand dollar weakened against the Australian dollar, and lately that has retraced, partly as a technical correction, right? So, we'll see if that trend continues. So looking at GN, I see this thing potentially heading into these levels if the pound continues to sell off, and then potentially, or maybe just reach the top of this area, and then potentially continue on its run higher, which I think it should probably do. Right? It's definitely in. This is a very strong level area of liquidity, right? So I think if we get into this area, we're probably good for a long. So we have to wait and see what happens. It could stall out here, never end up getting there. It could break through. It all depends on what happens with the pound, pretty much, right? So I would say right now the bias is pretty neutral on the pound, if not a little bearish, but I always want to be on the lookout for that longer term swing trade, which I think it should, eventually. I think the pound, should. It finally reached up back to these highs, and I think it should break and potentially head up to this area in the coming year. So we have to wait and see, though. But yeah, definitely on the lookout for a dip buy. Now let's take a look at EA here for a second. So looking at EA, it did. Oh my gosh, my computer's acting up. It did reach this strong area of liquidity. Obviously we're looking on the higher time frames here, but yeah, it definitely rejected, right? Also, it had this nice trend line that matched up as well. So I see the euro potentially heading higher longer term, right? So what we see here, oops, let me get rid of some of this stuff. So what we see here, it partially depends on the U.S. dollar, right? If the U.S. dollar continues its downtrend and the euro can, maintain its status, so to speak, then I think we could hit these highs again and continue heading up higher. But obviously that's a pretty big if. The other possibility is it breaks, and if the U.S. dollar can, see some strength, right? Looking at the DXY here, um, we can see it did reject on this area of resistance. So, we'll see. We'll see if it can, make its way all the way back down to here and potentially break lower. Yeah, analysts honestly are not quite sure what's going to happen with it. So I'm not one to talk. I don't even really look at the US dollar fundamentals. So I do not know, right? I do know about the euro. So looking at the euro, we had this huge bull run because of the recovery fund that was passed. So that was perceived very well by investors. And so what we're looking at here is, potentially just needed a correction and it will now head higher. Not necessarily because of the recovery fund, but just because A, if the US dollar weakens, this naturally will be pushed up a little higher. And also, looking at the ECB policies, right? Their central bank. They actually have a meeting in a couple of hours. So we'll see how that turns out. And if they deliver some less dovish, if they seem more optimistic about their economy, that could also help support the pound too. So we're gonna have to see what happens there. So I'm a little bit less confident in the euro until we see what happens with the ECB. Maybe it can set the tone. But for now, the time being, I'm somewhat neutral but more bullish on it because of those reasons. And so looking at EA here, I could see this thing potentially coming up back to these levels, and then if it breaks, continue higher up till maybe there or here, right? So we have to wait and see, but that's I think it also depends on the Australian dollar. Like I said, I think if the Australian dollar does what I think it should, which is appreciate because of the risk sentiment, risk on, global investors are optimistic about COVID and there's a vaccine. I think we could also see, again, same situation with GA. Um, we could see just consolidation, just like we saw here. Same situation, same thing that happened with GA, right? Because obviously they're similar. The pound and euro have moved similarly, looking at the charts, right? So obviously their charts are going to look pretty similar as well. However, the euro has not been. The euro's acted a little differently. So as you can see, the pound has been a little stronger than the euro. Looking at EG here, right? The pound recently has been a little bit stronger, but obviously because it's Brexit news, that has not been the case. So yeah, I'm honestly more neutral on EA. I don't like trading it. I don't like trading pairs that aren't ranging, that could go either way fundamentally. It's just there's no edge in that, right? And so if there's no edge, I don't want to take a trade. So for that reason, I am a little bit more bullish on this, given price action and everything. But in all honesty, it could go either way, right? Looking at the 4 hour, um, it's maybe a little more, like I said, bullish, but it could just keep heading lower and then maybe break. Who knows? So yeah, I don't know. And that's part of trading that I think a lot of people overlook, is that most professional traders aren't fortune tellers. Most good traders, profitable traders, if you ask them, hey, is this going this place? They're not going to know, right? Because, if you've been trading any amount of time, I think you'll probably realize you don't control the market and you don't have a 100% win rate. And no trader on the planet has a 100% win rate. And so anything you think is going to happen, there might be a higher probability, maybe a 60-70% chance of that happening once you get some experience. But at the end of the day, really anything can happen. So, and especially if the fundamentals are mixed, right? Then there's really no way to tell which way this is going to head. So, yeah, I couldn't tell you with any certainty. But with GJ, on the other hand, um, the fundamentals are a little bit more in favor of one direction than the other, and so is the technicals, and so I am more bullish bias on GJ, right? So let's move on to EN, right? EN looks a lot differently than EA, and the reason for that, like I mentioned, is because the New Zealand dollar has been very weak, as you can tell, right? And it's been weak because of that central bank action, very dovish for New Zealand, right? Um yeah, and so, by the way, not to plug anything, but I do cover all this every week and throughout the week for all my Swing Effects members, right? There's a fundamental channel where I talk about all this, and so you could take advantage of it. So if that interests you, do check out the link down below. Check out the Swing Effects website. But anyways, New Zealand dollar has been very weak, and then it sort of stalled out, and we saw the euro also, like, has stalled out, a little bit of a downtrend, and the New Zealand dollar started gaining strength back, and that is the reason for this sell-off here, all the way down to this 200 daily moving average. That's what these things are, by the way. It's the moving averages, right? So I reached this area of liquidity, right? So it reached this area of liquidity and this 200 MA, natural for it to find support there. And now, what's the direction I think it's going to head? Well, to be honest, it could go either way for the New Zealand dollar, but I think longer term it should weaken. Longer term, if their central bank continues with these dovish policies and they go through with the negative rates, I could see the New Zealand dollar continuing to weaken potentially, especially with the uncertainty of the U.S. elections, which should hurt risk sentiment, which should, again, weaken the New Zealand dollar. And so for those reasons, I might be a little more bullish on it, right? Because I do have a longer term euro bull bias and longer term short New Zealand dollar bias, right? And so we could definitely see this thing, head back into this area and then maybe potentially break. So I would say that's probably my view on it. But yeah, like I said, anything could happen. But just thinking about it logically and thinking about the probabilities, I would say it has a higher probability of heading up higher. And now it's above all three daily moving averages as well. So that's a good sign if you are long, yen. So congratulations. So yeah, anyways. Oh yeah, that's a strong level. Yeah, it's going to be hard to break this. But I definitely think it can head back into this region. So, yeah, we'll definitely see what happens, guys. Let's move over to EJ. EJ has been a real disappointment lately. I'm gonna be honest. It was a golden child here, right? The fundamentals lined up perfectly. You could have made a killing on this. I got in right here actually, as it came down for this 200 MA, and we had a third touch on this trend line, right? So I got in, I was expecting it, had a fib drawn, I think, like this, and I was expecting it to eventually hit this 127 area, which, would have net me, oh man, almost 700 pips. Unfortunately, I got impatient And I think I got out somewhere around here. I mean, I was still in profit, obviously, but yeah, I don't know. I was just impatient, stupid decision. But that's part of being a trader. So, but yeah, lately the fundamentals have sort of shifted, right? The yen has gained a little bit of strength recently uh, due to U.S. and China tensions and U.S. election uncertainty coming up, along with now some of the prominent vaccines, or this one vaccine. I forgot the company name, but they were very close with this vaccine, and they had to stall it because one of the patients had some problems, right? And how testing works for vaccines is if obviously one of the testers there's a problem they need to investigate. Is it because of the vaccine? What happened? Et cetera, et cetera. And so that's partially also holding the market down because a vaccine will help reopen everything. It will get the economies back on track and should help risk on sentiment. So, for that reason, it stalled out a bit, as well as the euro buying has stalled out as well. And so, these two pairs, these two currencies have mostly been somewhat neutral. Um, all right, the yen is no longer weak, but now it's neutral slash maybe a little bullish, but I'd say more neutral. And so we've seen this, consolidation happening, right? So we've seen this consolidation. It's keeping this, it's keeping these lows. Uh, it's holding them. It's holding them. It's not breaking. And I do see this thing heading higher eventually, like I said, probably up at least back to these highs, if not break them and then head up to here and, potentially up to here. But yeah, for right now, I think we could see a move back up to here and then break and head higher if my euro hypothesis is right that it's going to head higher, right? Because I don't want to say it's guaranteed, but I'm pretty positive we should see further yen weakness, right? As I think we should see that. So, yeah, that's my bias for EJ. Of course, anything can change. These are not signals. Don't just take what I'm saying blindly. Do your own technical analysis. Do your own research. This is purely for entertainment purposes, as the disclaimer usually goes. Um, so last thing we're going to look at is gold, right? Last thing we're going to take a look at. All right, everyone's been debating: is gold heading lower? Is this a great place to buy and load up on gold? What do I think? Well, I think gold's heading higher, right? I don't think gold is a short by any means, right? The fundamentals are still there. I think we could see a move up, uh, for sure, up till these highs, and then if we do break, then I would just target like 2200, and then 2300. But I think that's probably as far as I might get is 2300. That's like the most optimistic view I have. But yeah, let's take a look at the technicals. What's happened recently? Um, Gold was on a crazy bull run, broke 2000. Uh, made all-time highs ever for the price of gold, and so and that's natural because there's a lot of fear, and a lot of people put their money into gold when things are not doing well, right? It's a safe haven. And so it's been forming this triangle, right, on a 4-hour chart. It formed this triangle. We got a break below, and a lot of people then were like, oh, okay, let's short gold, right? But it never really broke these lows there, right? It just came in and it tapped this daily 50 moving average as well. And I think, maybe you can call it a short if it gets below this area, but unless it does that, right, then I'm pretty bullish on it. I think that would have been a good entry point. I think if we break and retest this area, it'll be a good entry point as well. Yeah, I'm pretty bullish on gold. So that is my take on it. I also think you should worry if it breaks this area, but that's how I like to look at things, right? If it breaks below certain levels, then obviously sellers are more eager to take control, right? And that should worry you. If your bias is another direction and price action is not agreeing, that's usually not a good thing, right? Because the market doesn't lie. Listen to the market. Don't be stubborn with your ideas. If there's not a lot of buyers, listen to that, right? Don't just say, oh, the market's tricking you. Trust me, the market does not try to trick anybody, okay? Um, yeah, for the most part, if it breaks a low or it breaks a high, that means it's more bullish. If it breaks a low, it means it's more bearish, okay? Um, and again, like I said, that's on average, especially if the fundamentals support it, then you need to listen to that. So yeah, I like to do it by usually if it breaks certain lows, I need to rethink my bias for different things. But it hasn't broken this low, and so my bias is still, especially if it breaks this low, then I could see more short, more short bias, maybe if we get a vaccine and all that. But for the time being, I could see this thing, heading up to here, and then eventually, like I said, up to 2200, and then 2300, right? So, anyways, that's what I could see happening. I hope you guys enjoyed this charts and coffee. I know it's sort of just me rambling on about stuff like a crazy person, but I know a lot of you guys find value in this, so you get an idea about how I think about fundamentals, how I look at things, from an eagle eye point of view, like very high up, right? Right, we're not going down on the 1 hour and looking at a trend line and saying, okay, I think when gold touches this trend line, then I think you should set your stop loss at 1918.2 and your target here at 1990, and that should be a good trade. That's not how you have to look at the bigger picture before you start going on those lower time frames, right? Um, looking on the 4 hour and the daily charts, and then once you have a higher time frame bias, looking at the fundamentals and sentiment and all that, then I go down on the charts, start drawing up trend lines and fibs, and then looking for entries, right? But when you're coming up with a fundamental idea, you want to be looking at a naked chart. I find this helps the most because you're not biased, right? You're not biased by a trend line, right? Like if you did this, for example, if you drew, if you drew this trend line and you saw it break below, well, what are you going to think? Oh man, because it broke that trend line, let's go short, right? But if you're looking on a higher time frame, or I guess a naked chart, you would see, okay, it's tapping into this very strong support, and the fundamentals are pointing up, right? The fundamentals are pointing up here. Then, you probably shouldn't be selling on a retest, targeting down here or down here. That's just not being smart, right? And I'm sure a lot of technical traders shorted this. And I'm not trying to hate on anyone that doesn't use fundamentals, but you could have avoided that loss, right? I'm sure there's a lot of people that shorted it, something like this, target down to here, target down to here, and look what happened. So, yeah, that's my view. I think looking at a naked chart and then on a higher time frame, and then going down, and then with the technicals and trend lines and whatever, so that they don't give you a bias, right? Because that trend line alone made some people short it when you need both fundamentals and technicals to support you, right? And just overall market structure, right? Like you should have waited for the support to be broken before I would say really confirming any type of short bias, and especially this low, right? So, anyways, hope you guys enjoyed this charts and coffee. I know it was very long, but I know you guys enjoy it. I know some of you guys gain value from it. So please smash that like button if you made it all the way to the end. And do hit that subscribe button for more like this. I'll see you guys later.